Welcome back from the short commercial break, and this is Financial Times with me, Julius Subuga. And this is where we give you the best of updates, news, and highlights of what is happening in the world of finance, the financial industry, and a lot in the stock market, both locally and globally. And right now, it's exciting to basically dive into what is happening in the global stock market, and most especially what is happening around us that is influencing the global stocks. So whereas there are mixed feelings all across the globe about the stock market, well, it has to really continue, and investors have to really make choices at the end of the day. So it's just about what will you do. So now here, the latest updates is that probably stock slip, oil blasts past 110 barrels at $10 per barrel as Russia sanctions bite. That is quite something also there to note. And this oil issue is also becoming the oil commodity is basically, its price is picking up, and we have, of course, always at all times, in all these times, there's always a gainer and there's always a loser. And so who is the loser here and who is the gainer? That's the question. But the oil price is basically going up by about, now it's about $110 per barrel, as even more sanctions are put on Russia. And Russia being also one of the major producers of oil, this is quite something to note as well. So, the debate goes on and on. Is war the answer to this? Or probably some investors take this as an opportunity. They're like, okay, maybe this is the opportunity. But at all times, war is not the answer, and probably it is. It really puts a lot of pressure on so many global systems, and this is one of them. So at the end of the day, you must make a choice to either invest or to pull out, depending on what your goal is. So here we are seeing that Apple, Ford, and other big US brands join corporate wave that is shunning Russia. And I think this is very evident because we have just seen that the Dow Jones, where many of these big brands fall, Apple, Ford, and other big US brands, many of them are falling in the Dow Jones index, 30 best performing stocks in the United States. And when you track that, their stocks on average is basically down, but it doesn't mean that every company is losing in terms of its stock. It only means that the average representation of all these stocks, is showing that probably many of them are losing. So that is it with that. And then probably Ukraine war won't deter Fed and company from March rate hikes. So that is it with there as well. Russia central bank freeze may hasten peak world financial reserves, which is also very much important to note there. So the Russia also froze the central bank, basically froze the stock market and the main stock market. And so probably you see there that it was done in a bid to just minimize losses in the value of the stocks, and thus trying to at least put the stock market there in a stalemate. But probably if you also go right here on stocks, you can basically see that there's a lot happening just right there. So probably my colleague Amriyad can help me do that. Just right here on stocks, you can have a general feel of how those stocks are basically performing just right here. So you can see that many of these stocks are basically down, and we have already seen that, by the way. So it's not really much of news, but let us now see what these guys are saying. So, well, this is basically a very good representation of what is happening as well. So we have seen all the other indices by the Business Insider. Now we have more here by CNBC. CNBC actually is showing us as well some live updates, and the Dow Jones Industrial Average is also down, as you can see right now, by 1.76%. The Nasdaq, well, nothing much has been reported right here as of yet. And the New York Stock Exchange Composite, nothing much also has been reported as of yet, but we can see the S&P Composite Index. The S&P Composite Index is showing a downward trend, a loss in the value of the stocks represented within the S&P Composite Index. So, well, looking at the S&P 500, the S&P 500 is showing that probably you have about a loss of also about 1.55%. So the S&P, one of the major indices in the United States, is showing a loss in the value of the stocks. And probably if you go down to the German, the DAX, we've already seen this, but probably these could have different figures right now as we speak. But if you look at this, it's also having the DAX in Germany is also losing by about 0.45%. So when you go actually up, you see over there that the Nikkei also is losing, and we've seen that is also losing. The Nikkei stock average, the Nikkei is basically the Japanese main index. The Nikkei 225 index is the main Japanese index, showing 225 best performing publicly listed companies and their performance in terms of their share price movements. So you can see it's losing by about 1.68%. So if you also look at the others, like the Hang Seng, we've already seen this, it's losing by 1.84%. We've seen this with Business Insider, but now CNBC is saying that probably you have this down as well by about 1.84%. So this is quite something as well. And in Europe is where we have seen really horrible downward trends in the stock. And well, let's see what these people are saying regarding the stock market. Now, if you look at the Shanghai, if you can go up, you can look at the Shanghai Composite Index, also showing a downward trend. The Shanghai, remember, is the Shanghai Index is the main index that is basically showing best performing companies in China, and it's showing also a downward trend of about 0.13% downward trend in the stock. And the S&P Sensex, that's from basically India, the S&P Sensex index is showing also a downward trend. So if my colleague Amiri could help me just go up, so we can just basically see the other indices as they come in. So it is important to note that many of them are showing reds. They're showing reds, and probably you won't see, you'll keep seeing this more often as probably the war goes on and on. So looking at some of the other key important parts of the stock market, or probably markets, is futures. Let's have a look at futures over here. It's basically quite also another interesting thing to keep abreast with. So futures basically, if you can go up, futures are basically contracts. They're more like contracts. So you agree, the buyer and the seller agree to basically buy a certain security or asset at a certain price, at a fixed price, and basically and agree on the time as well to transact this. So this is done basically to just minimize the market forces of demand and supply from changing any of these parameters like price. Price can change any time. So if you agree with if you are the seller, if you're the buyer and you agree with the seller to sell at a fixed price, then probably you can basically have that. You agree now, sign the contract, and then basically have that later. So digitally, there's a way to do it as well. So when you look at all these stocks, it is important to note that we are yet to see what happens probably by close of the day today. Yes, so you can basically see how the global environment and what is happening globally, you can gauge that right now events around us will always have an effect on business. So whether it is inflation, whether it is a political turmoil, whether it is a conflict, it will always have an effect, and most especially in developed countries where you have the stock market advanced and a lot of activities going on. And we may see this also in the next few decades because as our stock market grows big and bigger, we will see the effects of these global events and also local events. So it is important, it is very much important to have a very stable environment that is willing to support business and to also support the stock market as well, being an important part of the economy. So we have looked at all these indices, and they basically show that a few of them, except the Financial Times right now as we speak. Coming in is the Financial Times as we speak right now, has now just gained by about 0.24%, which I find quite interesting as well. It's been basically, it had opened when its stock was down, but now it's picking up. And we should say that probably the Great Britain's index, the Financial Times Stock Exchange 100 index, has probably been the most stable, or probably has been the most the best performing probably in Europe, even more than the DAX and all the rest from other countries like Sweden. So we can see that in Great Britain, that is what is happening. You can see an upward trend of 0.24% in the stock market there. Companies gaining by about 0.24% on average. So, well, that is basically it, but even the Euro Stoxx 50, the Euro Stoxx 50 is basically showing 50 best performing companies in Europe, and we don't have any figures as of yet coming in for that kind of segment. So by generally in Europe, of course, you expect that you have a downward trend in the stock market, and this is very much evident because this is very much expected because of Russia also being part of the European Union. There is a lot of mixed feelings over there, and also European Union also putting sanctions on Russia has not basically helped much as of late. And we've also seen the President of the United States coming up to basically during the State of the Union address recently, he mentioned that probably he was going to put sanctions on Russia and to also put its economy down if it does not cease war. But that doesn't seem to be like that doesn't seem to be much of an issue at the moment, because we can see that even in America, investors have become even more cautious because Russia is attacking more and more. So there are no signs of basically, there are no signs as of yet, serious signs of a stoppage of this, in spite of probably Ukraine and Russia talking recently. But of course, the stock market is an interesting market, so we can see these figures changing any time, and we can say that the sky is the limit, and we shall see these trends as probably they go on. And so lastly, about the futures, probably my colleague Amuriat will help me just go down to the futures and just have a look at how they are performing. These are contracts, remember. These are contracts. When you look at futures, the S&P 500 futures, remember futures are contract. They're already agreed. You already agreed with the buyer, probably with the seller, to buy a certain asset or security at a fixed price and at a certain point in time. And then probably this is done to avoid other forces that probably may change the terms of the agreement. For example, price. Price is a very big determinant here, so it keeps changing. The forces of demand and supply are always into play. So when you don't actually get that right, you may actually have a few bits of issues here and there. So the contract is signed, and then probably, so now what we see here is already agreed contracts by the buyers and the sellers. So the S&P 500 future is showing us that is down by 1.49%. So by every standard, the S&P 500 is down, and the Nasdaq 100 future is up by 0.14%. This is quite impressive as well. In spite of its stock being down as well, at least the futures and the contracts shows that probably you have an upward trend of about 0.14%. The Financial Times Stock Exchange in the Great Britain future, the Financial Times Stock Exchange 100 Index futures, well, that's in Great Britain. It is showing that, well, the value of the futures there is up by about 0.72%, which is quite also something. And that percentage change is being represented by 52.50, bringing it to a value of about 7,348.00 pounds, which I think that probably, the Nasdaq futures and the Great Britain probably FTSE 100 index are the only ones that are basically gaining. And when you look at the others, for example, the DAX 30 futures, the DAX 30 futures is showing a downward trend of about 0.112%. The Nikkei as well in Japan, the Nikkei 225 future is showing that many of these contracts are losing by 0.04%, and thus bring it to a value of about that, when you compute that change, about 10 points, and thus bring it to about 26,425.00 in Japanese currency. So when you look at the Nikkei 225, this is also, yes, we've just finished this actually. So it's all losing. And well, it is very important to understand that many of them are losing, except the Nasdaq and also the Great Britain index, which is the FTSE 100 index futures. So looking at rates and bonds as we speak right now, rates and bonds, the US 10-year bond is basically changed by about 0.023 and bringing it to a yield of about 1.739. The US bond has gained, and so has the Denmark 10-year bond, also has gained by about 0.005 points to about 0.063 as the yield. So the UK bond has a yield of 1.126, having lost by about 0.285 as well. And the Japanese 10-year bond is showing that it is at a value of about 0.139, having lost by about 0.045 points. So when you look at the bonds, you have the 10-year bond, the US and the Denmark bonds basically actually are the only ones that are gaining right now and having a yield, a positive yield. So when you also look at the commodities, the gold is up by 0.26% as we speak, and the copper is also up by 0.16%, and the same as Brent crude oil is up by about 6.07%. Of course, we expected that because it has the price of crude oil has gone up by about more than $100 per barrel. And so the soybeans, well, as represented by the CNBC commodities index, there you see it basically also losing. So by all means, commodities, we must say, are doing much better, especially gold, copper, oil are gaining in terms of their prices are basically increasing a little bit. But the crude oil price is basically increasing by far because it's actually taking most of the headlines. So the US bond and also the Denmark bond 10-year bond have gained, while the UK and the Japanese 10-year bonds have basically lost. And so it is also quite something to note. Well, there is actually very much more, but we can't go beyond this point because it's almost top of the hour. But however, we will continue to bring this kind of information for you just to have a worldwide view of what it is really, what is happening out there in the stock market, in the financial markets, and a lot more in the world of banking and finance, and lots more. So this is a general feel of what is happening all across the globe. And well, let's just see how the week goes, and if probably the Russia-Ukraine war comes down, probably we may start to see some of these stocks bouncing back, and well, probably we can see the stock market globally returning to normality when the Russia-Ukraine conflict and war is basically coming down, or probably is eased. Other measures have to be done to ensure that probably you have this kind of situation controlled. Otherwise, the stock market is always volatile, and it is always changing, and it's always very dependent on what is happening around us, and most especially issues to do with war. Raises the eyebrows up, and it basically makes investors cautious, and they're like, okay, this is a place where we can invest, or probably this is a place where we can invest. So there are two types of investors right now as we speak. So who are you? Are you the one buying, or are you the one selling? So that's it we had for you today, and my colleague Marcelino is coming up with lots more on Forex trading with the Trading Dawn. See you tomorrow, same time with me, Julius Nsubuga, 10 to midday. Smart 24. Have a good day.